you.
Now, as house prices show no signs of weakening, first-time buyers are becoming increasingly desperate to get on the property ladder.
Now, some lenders are letting people borrow as much as 5 times their earnings to do so. Are we overstretching ourselves? Our business reporter Karen Bowerman now reports.
Many of us long to buy our dream home, but as house prices continue to rise, our hopes fade, leaving us wondering where we're going to get all the extra money. Well, mortgage lenders may now have the answer. They're prepared to let us borrow more, in fact, a lot more than in the past. But is this a generous gesture or a bit of a gamble? How much are you prepared to risk to buy a new home?
Well, this one's it's just come on the market this week.
Carla Chases has weighed up the risks, done her sums, and is now looking for somewhere to buy. She's been saving for months for a deposit and is getting financial help from her parents, but she admits it's still far from easy, trying to afford a place she can call her own.
It's all a bit of a worry, really. I definitely think I've probably borrowed a bit more money than I should have done. But I just think that for me there's no alternative, really. I do want to get onto the property ladder, and financially, I'm just going to have to prepare myself for things being very tight, unfortunately.
Traditionally, lenders have been very strict about the amount you can borrow for a mortgage, relating it to what you earn. But some are now relaxing the rules, even offering so-called no-proof mortgages, where in some cases you don't have to provide any evidence of your income. It's led to the suggestion that some lenders are making it too easy for people to get into debt.
I think lenders aren't lending irresponsibly. They still take a considerable amount of time in assessing customers. They may not do so through employers' references. There are moves towards simplifying and speeding up the process with self-certification mortgages, so customers say their income. Now that is verified by looking at credit reference agency database and checking how individuals have used credit in the past, their behaviour, and assess their income that they've stated against their likely income in their employment. So there are a number of checks lenders do behind the scenes.
Of course, having a big mortgage needn't necessarily be a worry, especially with the cost of borrowing relatively low. But what if interest rates rise? What then?
What you can do to protect yourself against interest rate rises is take a fixed rate, because it doesn't matter what happens to the economy. If rates rise, you know your rate is going to stay the same. But I would suggest only take a fixed rate for 2 or 3 years. The other thing you can do, if you're looking to take more money and you're a young professional, take an interest-only mortgage for a couple of years until your income increases. But you must make sure in a couple of years' time you then go repayment.
And obviously we've got the kitchen.
At the moment, many say Britain is in the middle of a mini housing boom, which doesn't help first-time buyers like Carla. And some say the irony is that had lenders not helped to boost the market by allowing people to borrow more, prices may well have fallen by now, which would have made Carla's life a whole lot easier. Karen Bowerman, BBC News.
Well, joining us now is Paul Lewis, presenter of Radio 4's Money Box. Good morning to you. Hi. Now, what are the banks and the building societies up to here? Are they genuinely helping people, or are they sort of setting off a time bomb for the future?
Well, obviously they're helping people buy property because it's in their interest and the buyer's interest to get a property. But they certainly for some time now have been saying to people, well, we won't worry about 3.5 times your earnings because that isn't enough to buy a home. We'll look at your income, your outgoings, look at your student debt, how much you've got to pay off, and if we think you can afford £1,500 a month, then we will let you borrow a mortgage that will cost you £1,500 a month.
Are they asking enough questions? Are they being responsible in liaising with people, really finding out what their circumstances are?
That's very hard to say. Of course, mortgages are regulated now, so they should be. And of course, the bank has the advantage that if you don't pay it at some unforeseen circumstance, then they can take the property. In a sense, they're not really taking much of a risk. So there is some evidence they are over-lending, but with the new regulation that started a year or so ago, they should be more careful and they should go through a complete fact find. But ultimately, it's up to the buyer to make sure that they can pay that mortgage, not just this week, but in 6 months' time, if they lose their job, maybe their partner or they get pregnant, something like that. An unforeseen circumstance can make it very difficult.
Now, I want to talk about a story which you're following up today on your programme, which is about one of the building societies, one of the banks, which has been taking too much money from people.
Well, mortgage payments are very expensive, and I don't know what viewers would think if not, they didn't just pay their October mortgage once, but they paid it on Monday, Tuesday and Wednesday. Bank of Scotland has done this to several thousand customers. They took their October payments once this week and again the next day, and again the next day, so 3 times. And one of our listeners had had nearly £4,000 taken out of her bank. Fortunately, she could cope because she had a savings account, and that was used to stop her going overdrawn. Many other people will have got into real financial difficulty.
Has it been resolved?
Bank of Scotland promised us they would put all the money back by 5 o'clock last night, and at 6 minutes to 5 they contacted us and say, yes, it's all back. But of course that doesn't solve the problem of people who've gone overdrawn, payments have been missed. And of course if we make a mistake, the bank charges us 30 quid normally for every time that a payment's bounced. We don't think they're going to pay automatic compensation. They're going to make people ask for it.
Paul, thank you very much for that. And just a reminder, you can hear more on that story on Moneybox on Radio 4 at